Hello and welcome to another episode of the Student Loan Podcast. Today, this is going to be Travis riffing on TikTok tips that'll get you arrested about personal finance. I think this is kind of a little fun because there's been a lot of just really interesting stuff that I've been watching personally that's on my social media feed a lot more, I think, than it usually is. And with the switch towards video, with the switch towards everybody having extremely high performance smartphones that have really good forward-facing cameras, the barrier to entry to make video content is way lower than it's ever been. So I remember like 7 years ago, like forward-facing cameras were, they were okay for like taking a selfie, but like to do a really nice video, audio quality wasn't going to be great unless you attached an external mic. The lighting would a lot of times be a little off, and so people really had to use really powerful cameras to make good YouTube videos, or you had to do like some special stuff with like an external mic, and now people can just record something a lot easier, right? I think that's one reason why TikTok just exploded in the past, few years versus it exploding in the early 2010s, right? Similar, short, video content has been really going on for years now, but like I feel like it's just been a lot more present lately than it's ever been. And so a lot of people selling financial products or advice are on these platforms, including us. And some of it is absolutely wild. Some of the stuff I actually think could even get you like arrested. So I thought I might even do a little pod about it just for fun. So of course, this is for entertainment purposes only. Consult your financial professional before acting on anything you hear in today's pod. So why are our brains susceptible to finance advice that's like seems too good to be true? I think there's like, a lot of people have talked about a spiritual void. People are bored. We're looking for something to get us excited about life, right? I think, we don't have to worry about our physical needs, like in terms of what we're going to eat, right? Like maybe our ancestors might have had to worry about. And so, we have extra time on our hands. And so we have a lot more time to just sit with our thoughts. And a lot of times people want more than anything, right? They want that financial security. They want that financial independence, the ability to not worry about money anymore ever again, right? That's the dream. And, I think that's one of the reasons why this like money content on social media platforms can be so powerful, because it gets people really excited. It gets people really motivated. You're like, oh my gosh, what can I take action on? In terms of student loan stuff, some loopholes are real. Some tips are very accurate. Some of the things, you have to jump through some hoops, right? Like if you're doing a double consolidation, got to send in 2 paper snail mail applications. Who has to do that anymore? And then you've got to do that final online step. For married filing separately, you've got to file your taxes a certain way. For lowering your AGI, you've got to go log into your employer benefits account and increase your contributions so you max it out, right? So you pay less on your student loans. If you want to go for forgiveness, you've got to apply for it in some cases with PSLF, right? So there's all these like loopholes in that side of things. Now, when we see loopholes online, the ones that get the most likes, that go the most viral, are not the niche stuff like us. Like if I make a student loan loophole like art, video, it might get some really good reach, right? But, unless there's something in the news about student loans, unless there's some sort of big cancellation announcement that just came out, it's going to get a fairly limited release, right? It might get seen by, 50,000 people, but it's not going to get seen by 5 million. And so some of these things, some of the money advice, it's really geared towards a very broad audience. And it's got all the stuff that makes something go viral, right? Usually not always, but usually on social media people in these videos, they're often more attractive than the average person, right? They've got something that really catches your eye. Maybe they have amazing hair. Maybe their hairstyle is just very odd. Maybe they're just really, energetic. Boom, grab your attention right away. And then it kind of takes away our BS meter like we might have if we were reading something. So that's another thing I think that's interesting about social media is, if you listen to something, if somebody seems credible, if they, you're seeing them visually, you're not just solely evaluating the written word, right? I remember when I was like in like middle school, I don't know if you ever went through this, but I was in middle school, I tried out for like the all county band, right? One of the things they do is they had the people evaluating us not look at us, so that it would only be focused on the music instead of like any kind of bias that might be introduced by, looking at someone, right? So the people would look away and not, and not at us, and then it was just about the music. So that's And probably an ideal way to evaluate financial claims is to not have any idea who wrote it, but to actually evaluate it on the merits. But, with the video world we live in, it's a little different, right? You can really be swayed by certain things and how things are delivered. So I'm going to just, again, share some of these tips that I've seen online, talk about which ones might get you a wrist slap and which ones might send you to jail. So let me talk about the PPP program, EIDL, the tax credit, the pandemic related tax credit scams and everything out there. So there's a lot of folks on I've seen on TikTok that are sort of promoting some version of like pandemic relief fraud, right? Oh, just sort of claim it, or like in the most extreme form, I saw somebody was like posting about oh, look at this Bugatti that I bought with, claiming that my business was shut down and I get a advanced tax credit, for it, and then I'm going to go spend it on whatever I want. So, in general, these pandemic programs, you got to make sure that you qualify for them. Like, if you have a business, you've probably been constantly bombarded by tons of people trying to point out that, hey, you qualify for this, it's this $26,000 per employee if your business was shut down during the pandemic. And golly, these people came out of the woodwork to market to people, right? And what happened is they really overclaimed for people, and they took 20%, 25% sometimes of the credit that people were getting. It was ridiculous. Basically, Congress is trying to get out, relief as fast as possible. Didn't put any guardrails in these programs, and then allowed people to amend their tax returns up to, you can still amend, I think, 2020 up till April 2024. So a lot of people are even backwards looking, claiming these. And that this was such a problem, this pandemic-related fraud programs, that the IRS literally had to shut down the whole program to try to, come up with a new game plan for how they were going to evaluate all of these claims about these, pandemic-related tax credits for people that were business owners. And some of these people are going to jail. So, if you lie about, an application for any kind of pandemic relief program, two things can be true. The IRS didn't catch very many people, right? Like tens and tens, maybe even hundreds of billions of dollars were lost to fraud during the pandemic from all these different relief programs that existed, and how little checking that the IRS was doing to send money out the door. And the reality is the IRS has a lot more money now for enforcement. So they're a lot more likely to catch people than they used to be. And, if you're, kind of watching some video, someone's showing off, hey, look at all this amazing, tax credit that I got from the pandemic, you should do it too. You definitely want to talk to a CPA about it, and not the TikTok person, right? Because they might even be a front for some like tax credit firm that's getting, 20% of whatever fee they claim. And then if you try to say, hey, you lied to me, you said I qualified, I don't, they're going to be, gone, and they'll probably have already spent your money, and it might not even be a U.S. related firm that they're that it might not even be like a domestic company. It might be like some random scam farm somewhere else abroad that you can't touch, right? So that's one example. There's also people out there that'll say something like, oh, look, I didn't report any of my income. You don't have to report all of your income. The IRS won't catch you. I mean, I've seen like just crazy stuff like that. And it's like, yeah, that's how you go to jail. If there's a really good rule of thumb about reporting stuff, if you report all of your income, you're good. Like if you over-report your expenses, that's a civil conversation, like a civil penalty kind of conversation, where you and maybe your tax professional are sitting across from the IRS, and you're working out what back taxes you might owe, what penalties and interest that you might owe, and things like that. But if you don't report all your income, that's a criminal case, right? Because you're hiding your, tax evasion, right? You're avoiding taxes, not legally, if you're not reporting your income, right? So that's one thing to think about is, if you are over, aggressive on your deductions, that's not good either. You don't want to knowingly, do that, because you might get penalties and interest assessed and back taxes and stuff. So it's not going to it wouldn't probably be a disaster, but it would definitely not be good, but it won't be like, a criminal penalty, like not reporting all your income. Yet people online literally tell people, don't report all your income with this whatever loophole. And it's just a bunch of malarkey. Um, so other other thoughts on some other loopholes that I've seen that won't send you to jail, but they are, overdone, let's call it. Lots of real estate related loopholes on social media. If I had a dollar for every time I saw some sort of like real estate sort of strategy thrown out there to entice mostly medical professionals to sign up for it, I'd be very wealthy. I probably could do a bunch of real estate courses and sell them to people, but I don't. And the reason is I prefer, one, sending folks to friends of mine that do real estate content really well, like the Coach Carson podcast. Chad Carson's a great guy and teaches about real estate. Bigger Pockets has got a great forum. There's a lot of like really legitimate, more like sober type of places to learn about real estate if you want to get into it. And real estate can be a wonderful thing to do, don't get me wrong, but also sometimes people like really overhype it. An example of this is people that got super into the short-term rental loophole. Very legitimate loophole. If you want to have somebody in your family who's very actively involved in real estate, it can be a great way to write off income and save money on taxes. So the way that works is you go buy an Airbnb, you rent it for a short period of time on average, and then you spend more time than anybody else in material participation in the rental, which is, I think, at least more than 100 hours a year, but it's also going to be more than anybody else. And it has to be active management time spent, not like investor time. So, for example, you can't count things like filing the tax returns for the property. It's got to be stuff like jumping in and whatever, fixing something that's wrong with the property, or managing, bookings, right? Or stuff like that. So this could be helpful if you have somebody that has the time to do that, and then you have to track it. If IRS can ask for a log for you to prove that you spent the most time on the property compared to anyone else, right? So that's a test that has to be met, and a lot of people don't meet that test. And you also have to do a cost segregation study to determine what percent of the property's value can be depreciated against your active income. And this short-term rental loophole is becoming, I think, a little bit less generous in the coming years from tax perspective. And the other thing that happened with this loophole is it caused more people to get into real estate, and increased the supply significantly of people that wanted to do stuff like this. So you got to think in terms of I see something on social media hyping the short-term rental loophole. Can be really helpful. It can be really helpful, but it needs to be in the context of something you would want to do anyway. So if you want to go invest in a beach house and you've always thought this would be a fun thing, or a mountain cabin, and then you also, let's say you have somebody in your family that's interested in being involved in managing it, great. Do that loophole, save some money on your taxes, properly document everything. If you don't want to manage it like a short-term rental, like to get a tax write-off, if you just want to enjoy it and actually spend your summers at the beach house when it's like a popular time to be at the beach, make it a vacation home. Make sure you can afford it. Maybe you can write off some of it. It's not all about the taxes. Like everybody's always like, oh, you gotta live your life to maximize your wealth. No, you don't. That's a terrible way to live life. I remember being in St. Louis, walking around this really gorgeous cemetery. It's in North St. Louis, which is, a part of town that has, it's under-resourced, has higher crime rate in that area. And there's this randomly giant cemetery there. And then there's I think it's like the Adolphus Busch, the guy that founded like Budweiser or something. His big mausoleum is there. And oh my gosh, it's gorgeous. It looks like a church. Like it's a mausoleum where the guy's buried and his family, and it literally looks like a church. Stained glass windows, gorgeous. On the outside, it's like Veni Vidi Vici. Like I saw it, Concord, something like that. And yeah, he made a ton of money, founded a brand that'll be around for hundreds of years probably, and he spent a lot of money on a lot of things. And sure, there's people that in St. Louis that benefit from all the stuff he helped with, but it's like, at the end of the day, so you've got this really giant mausoleum, right? Like what? So you don't want to be the richest person in the cemetery. That's my point. One thing that we talk about with student loans, right, is would you do something if student loans, so for student loan forgiveness programs, right? A lot of times people really want to go for PSLF or something. And I say, hold up, do what you would do regardless of whether or not the student loan forgiveness program existed. Take whatever job you would take, like, anyway. And then if you would take that job anyway, then and only then would you want to consider going for PSLF. So same thing with all these like loopholes and tricks, right? Some loopholes are great, but you want to make the loopholes match your life and not the other way around. That's a big mistake to make your life match loopholes. So we'll talk about a couple other ones. Another real estate related loophole that gets pumped up a lot is professional real estate investor status. So this one's when you have one spouse who's working full time, the other spouse is working part time or spending the majority of their time on real estate, real estate related activities, right? So like this would be, one example I know is one spouse is a surgeon, the other spouse is a pediatrician. The pediatrician works part-time, so she can have the majority of her time being spent on real estate activities. She has professional real estate investor status, so she can write off all these things on their taxes against his income. So anyhow, that's, some examples of different loopholes. There's also things that bad advice too that I see on social media. So one thing that's really popular right now is just like insurance related products, like investing in insurance related products. So things like whole life, universal life, variable annuities, those sorts of things. Usually these sales pitches are done by folks that are not fiduciaries. So the reason being is if you're a fiduciary, if you're SEC registered investment advisor, like SLP Wealth is, you have to record everything. You have to document everything. You have to throw on all these disclosures in most of the things you do. It's a big pain in the butt, massive pain in the butt. But if you're an insurance person, the regulations are way lower. The rules are way lower. You can get away with, my opinion is that you can get away with murder, basically. And so you can go on there and just say ridiculous things that are misleading and super salesy, and it's totally fine, right? But some of these people will get on social media, and I've seen a lot of the ads, and I'll kind of explain usually how it goes, right? Usually there is a person with really amazing hair. It's usually a male, and the person has amazing hair or an amazing tan or maybe both, and they throw out something to get your attention, right? Like, do you want to invest like billionaires? Almost always they throw in like millionaires and billionaires to make you covet that, right? So it's like, do you want to be like a billionaire? Do you want to invest like Rockefeller? Do you want to know how Elon Musk and Mark Zuckerberg and they'll just throw out like every rich person you've ever heard of in the modern or semi-modern era, right? Like, have you heard of JP Morgan, the original man that founded the bank? Do you want to invest like them and create generational wealth? Do you want to be super wealthy and pay nothing in taxes? And do you want to never have to turn to the bank for money again, and you can borrow from yourself? Like, it just gets you all like, it's like a religious revival almost. Like, they just hit all of the pain, all of the desire, all of the deepest, sort of, most intense feelings of financial stuff that you want. And then what's the sell? What's the action they want you to take? They go, boom. They don't actually even tell you what it is, because then that wouldn't be mysterious enough, right? They want you to book a call so they can give you more exciting, secret, look behind this secret door kind of sales tactics. And then, it's sort of like, you too can learn these secrets, but you gotta fill in the blank. Buy my book, or, read, book this call or whatever. And it's all like high fee insurance stuff that has super high commissions. That's what the whole pitch is. And when a lot of these, sort of features these products, like when it sounds too good to be true, it is usually. So in the case of insurance stuff, okay, investing like billionaires. Well, billionaires are trying to avoid estate taxes. And you need to have, if you have more than $20 million when you're near the end of your life, then yeah, like if you can get stuff out of your estate into a like whole life policy, which is not in your estate, then if you, structure the contract the right way, you might avoid, hundreds of millions of dollars or tens of millions of dollars in estate taxes by transferring assets out of your estate to be titled in a different entity. Okay, so If you're not in that situation right now, if you're not a 90-year-old billionaire trying to reduce your, estate tax liability, then whole life is kind of stupid, in my opinion, right? Like there's not really a great use for it. Now, what about the tax benefits? Tax deferred growth. Well, if you have an index fund that yields 1.5 or 2%, that's super efficient from a tax perspective, and that it's not throwing off capital gains distributions and unnecessary dividends. You're paying qualified taxes on any dividends that do exist, so you have a very minimal tax drag on that, and all the capital gains are being deferred when they grow. You're not paying taxes along the way. You're only paying when you sell. So that is almost like a tax deferred type of growth vehicle. Now, in the case of a lot of these insurance products, some of them can't be touched without penalties until you're 60. When you invest, you can pull the money out for whatever you need whenever you want, right? So that would be an example of a superior aspect of brokerage accounts to insurance type of products for investing. What about borrowing from yourself? What about that amazing, strategy? Well, if I have an investment account, I can borrow from myself all I want. It's called margin, right? So if I have a $100,000 investment account, I can go get $100,000 in cash tomorrow, and then I've got to pay it back. And then if I don't pay it back, then there's a margin call, right? So it's the same general concept as with insurance as it is with investing. But the difference is you have this sort of pool of money, and then if you borrow from it, well, now you've got to pay back a bunch of money that you've got to pay yourself. Well, what if you're paying yourself interest? Well, the money's still coming from me. So if I'm paying myself 5% interest to pay back a loan that I took out, I'm still paying the money. I'm not making anything on this. I'm taking money out of my pocket and repaying money that I pulled out of an account and spent. So it's the same it's the same kind of thing that you could do with home equity loans too. Well, you're like, well, wait a second. I'm paying the interest to, a bank instead of myself. Well, it doesn't matter. You're still pulling more money out of your own pocket to give back to yourself. So you can't think of that as savings. That's a little silly. So the whole idea of infinite banking, it's just the concept, infinite banking. It sounds like it sounds like a cult or something like that. And again, a lot of these, industries have been around for 100 or 150 years. And the people that are attracted to these industries, in my view, a lot of them don't understand math. I think that's the biggest thing. I don't actually think investing in so there's different types of insurance people, right? There's the Farm Bureau insurance person that's helping you get a great deal on your homeowners. That's a very professional job, right? You're just shopping around trying to get the best deal, the best coverage. It's a pure insurance product. Everybody needs it. Same thing with own occupation disability insurance or term life, right? It's just a vanilla thing that you got to buy, and it's a great thing. But the insurance companies obviously are always looking for extra revenue, and so that's when they started coming out with these products that offer features of investments and features of insurance and combine them together. And the thing is insurance companies have these people called actuaries, and they're super smart. They have to pass a gazillion exams, and their whole job is to figure out the math of the most complicated products in the world. And I've taken some classes with these folks in college. They're super smart, and they, can calculate the exact amount of, profit margin and returns and on all kinds of different products, and guarantee you they're going to make a lot more money than you will on these products that they're selling of any kind, right? There's all these, index deferred annuities and all these things with all these terms that investors don't even understand what the terms even mean. You're told something like, you can't lose money. Well, it's okay, well, I can also not lose money if I buy a treasury bond and hold it to maturity. There's almost a certainty that I won't lose money and I'll actually get back my full original investment, but it's an investment, right? It's just all these weird things about just how, sort of stuff online, it seems really attractive. It seems really exciting. And then there's a bunch of catches to it. Other things that I've seen besides insurance related pitches online, I've seen just lots of ideas for passive income. Who doesn't want passive income? Oh my gosh, I'm so exhausted at my job. Look at this thing I can do to make passive income. This sounds so much better, right? That all of these things are sort of strategies to lure you in, get your attention, get you to try something that, you might not otherwise try, because it's exciting. So people like things like private real estate syndications, angel investing, crypto, fourplexes, NFTs, alternative investments. There's stuff on podcasts where you can invest in art, you can invest in wine. There's all these things that I think mostly sprung up because of very low interest rates and because people are bored and people want to live and be excited, right? So like it's like you could have a plain white toast, or you could have a cake stacked with all these fancy things and it's gorgeous and people want to be excited. It's just human nature to want to be happy, excited and interested and know that's new. So everybody always wants new. Nobody wants old school. Nobody wants boring. And when it comes to your money, that's really dangerous because what it leads to is gambling. So I don't want to be like a little, what's the word, scold or something like that. Like that's not my goal. Like I think there's a lot of legitimate investing you can do in other things, right? Like there's a lot of really rich angel investors, a lot of really rich crypto people, a lot of really rich real estate investors, people that invest in alternative investments, etc. But the point is you want to figure out something that you can feel comfortable with. You want to figure out something that you can understand, that you enjoy, like, or at least, are okay with, having somebody that you trust manage for you or something like that, right? Like a diversified index fund portfolio or something along those lines. So, I just wanted to kind of share these things. The next time you're scrolling or doom scrolling and you see some video about finances, there's a whole like science behind like grab your attention, get you interested, make you want something, close the sale. Like that's like the formula. And watch out for that, right? And then if somebody's got a legit loophole, yeah, they might not be the most polished person in the room in terms of the delivery, right? Like for example, myself, somebody said the other day, I say a lot of filler words. Oops, that's probably true. I'm not saying that I'm the gold standard by any means, but I think that the reason why people trust us on student loan stuff is because people can tell that we know what we're talking about and we don't try to overhype things. We do try to get people's attention. We do try to make people want stuff in an ethical way, I hope. And then we do try to get people to take action, but we want it to be in a way where like you would benefit from that, or you probably would benefit from that, right? So things like, filing an extension this tax season, that's something that our tax team is helping a lot of people do. Figuring out filing separate versus joint. We're trying to come out with some online calculators to help with that, that we use in our tax business. So anyways, I think that, beware of online videos and just be thinking, does it sound too good to be true? What is the incentives of this person? What's the catch? What are they trying to sell? And, good content should speak for itself and should be something that you can kind of read through somewhere and understand and verify somewhere else, right? It's kind of like science. You want the experiment to be repeatable and verifiable by somebody else trying to do the same thing. Maybe kind of do that with other things you read online about loopholes just to verify. And this is fine to verify with us too. Like if you verify double consolidation loophole, you'll find it on, I think the state of Massachusetts website. You'll find it on NPR. You'll find it on a lot of different places, right? So sometimes we do come up with loopholes before anybody else does. Sometimes for student loans. But anyhow, hopefully you enjoyed Travis's the Travis Rand episode. If you have questions or comments or things you want to talk about or things you want me to feature on the podcast, you can even use this line to just share an idea for a podcast episode if you want. studentloanplanner.com/voicemail. So go to that URL. You can record a question. I'll feature it in a podcast episode. I really love to hear what you guys want to hear about. And then if you need help with your student loans, a lot of married filing separate stuff right now with tax season, studentloanplanner.com/book. Thanks everybody for listening to today's show. Have a wonderful rest of your week.